Across Africa, consumer inflation is soaring. Like many nations on the continent, South Africa is dependent on imports for food and crude oil. Data from Statistics South Africa show that inflation hit a 13-year high in June and July. In annual terms, inflation was 7.4%, more than forecast by analysts who had predicted a rise to 7.2% from 6.5% in May. High interest rates in developed countries is causing investors to withdraw their money. African currencies are being devalued, and that's further shrinking the region's economy. Economist Ken Gichinga says central banks must raise their interest rates.
The rise in interest rates in the US has affected. It has forced central banks in Africa to also raise interest rates, and by that it has meant the economies of African countries slow down, which means job creations become lower. It also means production slows down, and eventually it means fewer people get jobs.
Analysts expect further 50 basis points raise in the repo rate, the rate at which commercial banks borrow from a country's central bank. That would mark the fifth increase in a row. The June headline inflation, the measure of the total inflation within an economy, including commodities such as food and energy prices, which tend to be much more volatile and prone to inflation spikes, was the highest since May 2009 during the global financial crisis. Statistics South Africa shows that food and fuel prices continue to be significant drivers of price pressure. Fuel prices were up 45.3% in June, an essential annual increase since the agency's Consumer Price Index series began in 2009. Price of food and non-alcoholic beverages rose 8.6%, the highest annual rate since March 2017, when South Africa was recovering from a severe drought. With its economy continuing to shrink, the South African government is facing substantial financial pressures. The situation is worsened by the COVID-19 pandemic and Russia's war in Ukraine, which are both major global food exporters. Paul Ndiho, VOA News, Washington.